Tesla became one of the first and one of the biggest corporate entities to have invested in the cryptocurrency Bitcoin. Now, this move marks a major moment in the history of cryptocurrencies and the future of cryptocurrencies, in fact, because this marks a point where corporations have started accepting cryptocurrencies as a way of valid trade. Now, cryptocurrencies have had a deep history of risks being associated with them, the major cause for which is the lack of regulation and the lack of centralization of the money that cryptocurrencies represent, as a result of which its values are known to be very volatile, which has been seen in Bitcoin's history. Now, what does this move really mean for Bitcoin, which has, in the scheme of cryptocurrencies, been one of the most successful cryptocurrencies? To understand that, we have to look at the value that Bitcoin has represented over time. After starting in single-digit sums, Bitcoin has catapulted to a point where today it trades at close to $46,000 per Bitcoin. So it has that massive amount of value that it has generated, and the reason for that has been the interest around the blockchain and cryptocurrency technologies. Now, blockchain has represented one of the most secure forms of technology today, and the essence of this technology generally means that it's very difficult to be broken into, and it is completely decentralized, which means that it is a form of currency which is not held by a particular body. Now, while that is good, and which means that the virtual currency is up for open and fair trade, it also means that in terms of regulations, it's very difficult to grab hold of a currency like Bitcoin. There's no central body which can, for instance, help you recover your Bitcoin if you end up losing it, or if thieves end up stealing your crypto wallet. The nature of cryptocurrency means that nobody else can really help you recover your passwords or recover your keys, which is a big concern in this new currency field. Many players have also expressed concern that for corporate entities which have market holdings in futures and other forms, Bitcoin and other cryptocurrencies do not represent a good idea because its values are very volatile and it can erode at any given point of time. Over the past few years, while we have seen many Bitcoin value surges, which has brought itself to the $46,000 mark today, we have also seen a number of crashes which has taken Bitcoin down by a massive margin, which is not something that happens in the equity market, in the stock market, or even in the money market, because there is a fair amount of regulation. Even with investors investing in futures or playing short, there is a fair amount of regulation which prevents stocks from being as volatile as this. And for companies investing in something this volatile would essentially mean that their money is at stake and the value of their money can get eroded at any given point of time. On this note, Tesla investing $1.5 billion in Bitcoin and having that holding, and also announcing that they might start accepting payments for their products in Bitcoin, is an interesting move and might just be one of the first moves which shows that the corporate world is ready to accept cryptocurrencies as a valid mode of payment, which also means that cryptocurrencies might not just be in the discussions and on the sidelines anymore. It might just be accepted as mainstream money going into the future.